Everybody always talks about how buying a condo in Vancouver is going to be the best option for an investment, or Burnaby, or close to an economic center. And in this video, I'm going to give you guys my opposing opinion. I'm that Agent Kelly. I apologize for the lighting right now. I don't really know what's going on. But anyways, I talk about Canadian real estate in my local market of Abbotsford and the Fraser Valley. If you guys like my content, subscribe to the channel, like this video. If you want to chat, I have a link in my description where you can book yourself right into my calendar so me and you can have a chat. So first off, for most people who are buying investment property, you're probably not looking at $1.8 million to $2.5 million detached homes in Vancouver. So for the sake of this video, we're going to be talking about specifically apartments. And if we take a look at what downtown Vancouver condos have done since 2018, we are barely up since the 2018 highs. Like, what are we up, like 30 grand in over 5 years? And if we compare this to Langley condos, we are up basically 31% in the last 5 years. So we can see clearly what has been the better investment over the last 5 years. Not to mention, over the span of that 5 years, your cash flow numbers would have looked much, much better in Langley as opposed to downtown Vancouver. And this is exactly why I have been and why I continue to be so big on investing anywhere east of the Port Mann Bridge. I really don't like anything past New West or Coquitlam for investing, to be honest with you. Now, obviously, there's going to be some outliers to that. It's, a case-by-case, property-by-property basis. Obviously, if you're getting a screaming deal in downtown Vancouver, then buy that, right? But on a general terms, generally speaking, anything east of the Port Mann, in my opinion, is the way to go. And I think this trend of slow, kind of grindy upwards gains in Vancouver condos is likely going to persist into the future for a couple reasons. I think there's a threshold of affordability that we've hit that's just really hard to push through. I think there's just not a lot of buyers left at $850,000 for condos, right? Like, and I'm not saying that there isn't any buyers at that price range. There's buyers, there's enough buyers to push the prices up. I just don't think there's enough buyers to push the prices up as fast as I would like the prices to go up if I was going to invest in those areas. And especially not for the risk I'm taking on by investing in those areas, right? You're taking on a bigger mortgage payment. You're going to be way more cash flow negative unless you're putting down a lot of money. And here, if your tenant stops paying, well, you've got a massive mortgage payment on your hands. And secondly, why I like out east as opposed to Vancouver is the argument has always been, well, all the high-paying jobs are located within the city centers. Well, that was true up until roughly 10 years ago. Now you can have high-paying jobs working from your laptop, being a YouTuber or doing something in crypto or whatever it may be, being an online coach, whatever it is. There are tons and tons of jobs that have now been created with just the way the economy is going, where you can make good money from your laptop. But not only that, a lot of the high-paying jobs will actually allow you to work from your home now. So there's not as much of a need to be in the city centers anymore. And that, again, is going to diminish the potential buyer pool. And I think with the making money online thing, with the way, the cost of living has skyrocketed, but wages are largely unchanged, more and more people are going to look to make money online, which I think that economy, the creator economy and the online, business space is going to continue to get bigger and bigger and bigger over time, which means less and less people working these, white collar corporate jobs in the city centers. And of course, the work from home thing is probably going to be around for the foreseeable future. So basically what I'm saying is there's going to be less of a need to live downtown as time goes on. And third, the monthly cash flow numbers in Vancouver and Burnaby, like I was saying before, are extremely unattractive. Now, there might be some outliers to this, but for the most part, and generally speaking, I haven't ran the numbers recently, but I want to say you're probably going to be about $1,500 a month cash flow negative to buy a somewhat decent condo in Burnaby or in the good areas of Vancouver. And every investor I'm talking to right now wants cash flow positive, or at least cash flow neutral, or maybe a slight negative situation. But people do not want to stomach negative $1,000, negative $800, negative $1,500 a month right now. So that, again, is going to diminish the buyer pool, because now we have less people needing to live there and less people who want to invest there. And I think with all of these things working against the buyer pool and making the buyer pool leaner in these denser areas, it's going to be hard to get that accelerated price growth that we've seen, in the past. And I think with the way affordability is and the way it will be for, in the coming years, interest rates will likely come down, but they're not going back down to what they were, right? You might be around 4% in the next couple of years or something like that, or maybe high threes, but even that, it's still going to be largely unaffordable. And for that reason, I think the bulk of immigration and migration is going to be moving out to the more affordable areas: Surrey, Langley, Mission, Abbotsford, Chilliwack, Kamloops, Kelowna, Penticton, Vernon. All of those areas should continue to see pretty decent population growth just based on how much more affordable it is to live there than in a Vancouver or a Burnaby. Overall, I just think buying out east for an investor makes more sense. It's less risk, it's less capital up front, your cash flow numbers are going to look much better, you're probably going to get more appreciation, and because you're putting up much less capital and getting more appreciation, your ROI is going to be exponentially better as well. So that's my take on Vancouver and the surrounding areas. I've always kind of thought in a cash flow perspective. I want my property to appreciate. Ultimately, that's what we're after, is the appreciation, because nobody really gets rich off cash flow. But at the same time, with that appreciation, I want the investment to be safe, and I don't want to be paying out of pocket and subsidizing that investment every month as well, right? So in Vancouver, unless you're putting up 35, 40%, you're going to be coming out of pocket pretty heavy every single month for the most part. Whereas in Abbotsford, Mission, you're pretty close to cash flow neutral right now. You might even be cash flow neutral if it's an older one-bedroom unit, one bedroom that's 10 to 12 years old. You might even break even on that right now. So the Valley, I like out east. If you guys enjoyed this video, subscribe to the channel, like it, and I'm that Agent Kelly. I'm making moves to move you. Peace.